Hello everybody, this is Dare here. Today I want to show you how to trade the non-farm payroll profitably. So why do we choose this topic? A member in our group here on YouTube asked for us to do this topic. So we're doing it for him. So if you have something like that, a new topic that you want us to elaborate on, shoot it out. We can do it for you, okay? So let's go for it. We're going to look at what are non-farm payrolls. We are going to talk about what date are they released, what strategy we are going to apply. In fact, we call that strategy trading the trend. We're going to look at risk management. How do we manage risk? And lastly, we are going to go into a live examples and show you on the real chart how we handle non-farm payroll on the monthly basis. Okay. So let's discuss it. Non-farm payroll, they are just the monthly report that comes out from the US. It tells us about the number of new jobs that were added to the US economy. Okay, these jobs that were added exclude farm workers, okay, and some other categories, but majorly it is the report of how many jobs were added to the US economy. Okay, the report is released on the first Friday of every month. First Friday of every month. The time is released in the US is about 8:30 Eastern time and 1:30 in the morning. In the afternoon GMT. So 8:30 in the morning Eastern time and 1:30 afternoon GMT. All right. Let's talk about a specific trading strategy that I think it works, that I know it works. Okay, listen to it very carefully. It might not happen every time the news is released, non-farm payroll is released, but when you get that opportunity, when it happens, be sure to take the advantage. So I call it the trading the trend method. Okay, what is this method? I'll show you what the method is all about. Okay, if you look at the charts, okay, this is Friday, June the 4th. Okay, Friday, June the 4th, the data comes out. Okay, at 8:30, as we said. So expected figure was 645k. We expected 645,000 new jobs to be added, but look at what happened when the data came out. Only 559 was added. That is bad for the economy. That is bad for US, right? Because less number of jobs were added. Okay, which means Euro dollar should rise against US, Aussie should rise against US, GBP should rise against US, everything should rise against the US because the data is bad for the US. So what you do as a trader for this strategy, you go into your chart, don't do anything for the first 15 minutes, watch what happened with the price action. So you know what you're expecting is that Aussie, Euro, everything should be rising against the dollar. If the price action, listen carefully, if the price action agrees with the data, you are on for a trade. However, if the price action disagree with the data, then you are not trading. You are not trading. Only trade when the price action that you are looking at on the chart after 15 minutes agrees with the data. Okay, as you can see, this particular release on the June the 4th agrees. The data and the price action agree. The data says Aussie should rise, and this is Aussie US dollar for example. This 15 minutes chart, you can see Australian dollar rose in the first 15 minutes. So what you do is after the close of that 15 minutes, you will go long. Okay, actually the going long is after the close of this 15 minutes. So you go long and you target the initial move. Your target will be the first initial move. And if there's a way you can trail your position to even get more, because as you can see, it went up more and more. So this is the strategy. I'm only giving you one strategy to go and practice. But remember, only trade if and only if the we agree, the data agree with the price action. Otherwise, no trade. Okay, so the last thing I'm going to remember is about risk management. Okay, forex without risk management is like playing with fire. Okay, blowing out a can. So this kind of trading, NFP, is high volatility. It has high volatility. Therefore, you must protect yourself. If you are trading 2%, don't forget, keep it 2% per trade. If you are trading 1%, keep it 1%. Use that as your stop loss. Okay, use that as your stop loss and keep your risk to the minimal level. Okay, so now let's go quickly. I'm going to take you to the live chart and I'm going to show you good example. But let's go to Forex Factory. This is Forex Factory. So you can see this is the last release. This is July the 2nd, 2021. The last release, which is US non-farm payroll. Okay, so you can see we're expecting this figure is 725k. Actual is 850k. So what do you think? Good for dollar, right? So because more jobs were added, it means that you are expecting euro to fall against US, Aussie to fall against US at that time, GBP to fall, and other currencies to fall against the US. So what we do now is we go to the charts and we look what happened July the 2nd at 1:30. Okay, let's see what happened. If it agrees, if the first 15 minutes are actually euro or Aussie or GBP, New Zealand, they started falling against the US, you know, both data and price action agree. So let's see whether they agree. So we're looking for July the 2nd. Okay, July the 2nd. Let's go July the 2nd. July the 2nd. Yes, this is July the 2nd. Right. This is the action time. Let me make it bigger. Okay, so you can see. Okay, this is the action time. If you look at the data window, you see it is right time at 3:30, or because of this broker is 2 hours ahead of UK. So you can see price action says in the first 15 minutes, actually it nearly agreed initially. Maybe initially it went down according to the data, but it backs up again, and we had a bullish candle after 15 minutes. So that means after 15 minutes, the data disagree with the price action, or price action disagree with the data. Therefore, no trade for you. Okay. So next thing we're going to check is the next date, for the last date for the release. Let's check. Okay. All right. July 2nd. The next one was June the 4th. So let's go and see what happened on June the 4th. June the 4th. Okay. So June the 4th. So let's quickly go to June the 4th and see June the 3rd. June 4. It's going to be easy for us to recognize it when we see it. Okay, yeah. This is June the 4th. You can see June the 4th. Okay, let's see what we're expecting. So June the 4th is bad for the dollar, right? So because less jobs were added. The forecast was 645 and only 559 added. So we expect euro to rise, Aussie to rise, GBP to rise against the dollar. And bank, the first 15 minutes we see Aussie rose against the dollar. So what we do after the close of that, we put our buy here. You can see it went down a little bit, but already you are into the market. Advantage is that by now the market has cooled down, spread has becoming almost normal again. You know, the initial first 2 or 3 5 minutes is always very chaotic for non-farm payroll. So try to avoid the first 5 minutes, because you're going to be getting a lot of whipsaw, you know, and you are not going to get a good market feel. So now you go long, and as I say, you target the initial move. So this is the size of the initial move. So you target the size of initial move. And if you have other method by which you can trail your position, that would be fantastic. So let's see one more example. Let's see what happened on, let's say, for example, March 5. Okay, March 5. Let's see March 5. So let's go to March 5. March 5. I just want to show you one more so you can see when we trade and when we don't trade. 5 This is 5th of March. Okay, this is 5th of March. What happened 5th of March? Okay, all right, so let's look at the time. Look at the data window. Yeah, so that is it. That is 5th of March, and it's at 1:30 or 3:30 by this broker. Okay, you can see let's see what the data says. March 5 is good for dollar, right? Because we have more jobs added. We forecast 197,000 jobs, but 379,000 were added, so good for dollar. So we expect Aussie to fall against dollar, pound to fall against dollar, New Zealand to fall, everything to fall against the dollar. Let's see what happened. At the release, yes, initially, yes, it fell. That's why you have to wait for 15 minutes. But at the end of 15 minutes, you have a bullish candle. That is a rejection of the data. So they rejected the result of the data. There could be many reasons for that, you know. For example, it could mean, because there was a revision here. They revised this data, and other things might cause that to happen. So in that case, you do not trade. You just forget about it. This is not your time to trade for this particular moment. Okay, let's look at one more before we go. Let's look at the February 5. What happened February 5? So I'm going to quickly go to February 5. This is February 5. What is the time? Yes, this is the time. That is the relay. So let me blow it. I think I've blown it up already. So this is February the 5th. Okay, so let's see what the data says. Okay, data says we are expecting 85,000 new jobs, and only 49,000 was added. Only 49,000 were added to the payroll. What that means is it's bad for the US, it's bad for dollar. So you should see Aussie rise against dollar, GBP rise against the dollar, you see Euro rise against the dollar. But let's see what happened, what the price action says. So the first 15 minutes, yes, price action completely agree with the data. So when price action agree with the data, my friend, what you do, you go with the data. You go with the result of the data. As you can see, you will go long after 15 minutes, and you will target the initial move. See, by this time, you should be out of the market. But as I said earlier, if you have a better way of trailing, you can actually leave the trade up to the end of the day. You see, this is the end of the day. This is a day separator, so you can leave the trade up to the end of the day, but that's risky. If you are going to do that, make sure you use a trailing stop loss. You trail your profit. So guys, I've shown you one method. As I said, there are many methods to trade non-farm payroll. Many methods. Okay, but this one, I think it wouldn't happen every time you have a non-payroll, but anytime the data agrees with the price action, or the other way around, the price actions agree with the result of the data, oh la la, you are in a trade. So guys, I hope you enjoy this. I hope you like it. If you do like this video, give us a thumbs up, and remember to subscribe. And after subscription, you might want to click the notification bell so that you can receive update from me. So nice talking to you today, and I hope to talk to you very soon. It's Dari.